Okay, let's get a look at some commodity trades for the week ahead. Scott Bauer joins us now, CEO at the Prosper Trading Academy. Scott, always great to see you. Talk to us, if you would, about oil. Is it going to stay above $60 US?
So if I can give you the 2 to 3 week outlook, yes. If I can give you the 2 to 3 month outlook, I'm going to say no. So there's definitely some nice tailwinds behind it right now on the heels of the OPEC supply cuts. They're, continuing to stick with it. Venezuela being offline due to the power outages and other things going there. So, and also we saw the news come out of China overnight. Their manufacturing data was actually pretty good for the first time in a while. So those are all tailwinds for oil right now. That being said, at some point there's going to be a give and take here between the OPEC supply cuts and the slowing demand, the slowing global growth issue. And I think that's going to come to a head pretty quickly here. And unless we see continued positive numbers out of China over the next couple weeks, next month or so, I think those headwinds, the slowing demand and the slowing global growth, are really going to hit this space. So I'm bullish over the next couple weeks and bearish over the next few months.
So you think, so oil's going to struggle. What about, though, surely OPEC's determination to keep supply tight is going to be a powerful backing for oil. As you probably saw, Reuters reckons their supply has fallen to the lowest in 4 years, the OPEC supply.
Yes, it has. It sure has. And, we haven't really seen them stick to their supply cuts over the last couple of years. Every time they've come out with it, they kind of cheat a little bit here and there, and we haven't seen it. Now we're seeing it. It's going to be real interesting to see over, in my opinion, the next couple of days probably, maybe the next instance come up between OPEC and President Trump, because you got to think President Trump's going to come out and pound the table on we need more supply, not less, and we got to get these oil prices down. So that's going to be an interesting byproduct of what's going on here.
Give us your take on gold. Obviously, the US dollar drives that, and the Fed no longer seems keen at all to raise interest rates.
No, not at all. And I see some real big headwinds in gold right now, especially coming off the heels of the China manufacturing news and being kind of at least for now, a risk-on environment. So I think that's going to really hurt gold. I could see us dropping down to about 1260 or so. That 1300 number that we've been hovering around, that's really more or less just a psychological number. It's not a real big technical indicator, but there are some real headwinds here. Rates, not going anywhere. So let's see what happens here. But I really see 1260 or so in the cards for gold in the not too distant future.
1260. Oh, that wouldn't please the gold bulls.
It would not.
How are you playing the farm commodities now amid this brutal flooding in places like Nebraska?
It's really hit it hard. So where do you go from here? The volatility to farm commodities is always to the upside for some, outlier event like what we're seeing right here. I think it's, I'm kind of staying on the sidelines right now. It's a little bit too volatile for my blood right now. Let's see how this plays out. And, most importantly, let's hope this flooding can just really get out of its way soon so the people can get back to some sort of normalcy.
Scott, thank you very much indeed for joining us. Have a great week in the markets yourself.
You as well.
Scott Bauer, CEO at the Prosper Trading Academy.